Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. All right, Nick. Awesome. So welcome everyone. This is another session of the Week in Italian Startups, where we discuss the latest news happening in Italy for the past week, essentially. So this is based on a newsletter that Nicolo compiles every week religiously. So if you're not a subscriber, please Google Nicolo Sanarico and you will find his links to the newsletter. But let's start and let's go over some of the main news of the week. So the week has been interesting in terms of a lot of fintech happening in different angles and with different angles and different deals, I would say, some consumer and some interesting M&A. So let's get started maybe with the biggest round, which is Skinlabo, a smart beauty e-commerce raising 6 million. And that's probably the biggest round of last week, I believe.
Yep. So it seems. And actually, it is a round that it is happening shortly after the last one that the company raised, if I'm not wrong. So I believe Skinlabo raised like 9 million in 2021. Yep. Mm-hmm. So this is an additional round from 8A Plus. Yep. And the interesting thing is that 8A Plus is the fund managed by Generali.
Yes, that's interesting. That's super interesting. So yeah, we've encountered 8A Plus a few months ago. They've been active and they're keeping essentially going. It's an interesting product which is deployed by Banca Generali to invest in PMEs in Italy. And interesting strategy, 70% in debt and 30% in equity. So that's a new way to see how banks are actually entering the innovation space, and I think it's a very smart way to do so in a way.
Yes, indeed. And this time they invested in a consumer company.
Yeah.
This is pure digital retail. We're talking about smart beauty. They produce their own, they distribute their own brands for cosmetics. The startup has been around for not too long. It's probably 3 years old now, and it has already, at this point, 3 or 4 investment rounds raised.
Yeah,
such a short period. So
yeah, I remember seeing the deal with Club degli Investitori a few years ago, and they closed a very good round in 2019, 1.15 million from angels, and then they exploded pretty much. So it really worked out really well. So awesome for them for sure.
Kudos to the management and the founders.
Yeah, totally. All right, let's dive into fintech deals because we have a list to check out. Credimi, first of all, basically the second biggest round of the week, raising 5.6 million from existing investors. So this is a particular round. So first of all, let's talk about the product. The product, I think, is very interesting. Is quick loans for small companies in Italy and ditte individuali, which is in Italy is essentially the way of saying the private that starts an activity and register as a taxpayer. So they do really quick loaning process, and they've been around and they've been good players. I believe this round has been kind of forced by the fact that the company needed to respect some Bank of Italy regulation and ratios. So there was this pressure. So it's a mix. It's kind of a mixed equity round, if you will.
Okay, this is a good insight. Is this something that's coming from your knowledge of the market or from something that you read around?
Yeah, no, because definitely.
The size is actually smaller than the previous round. So
exactly,
like a bridge or something that the
very good.
To do now.
That I also had, because I wanted to ask you a question about down rounds, but then digging, which usually down rounds are never a good sign, I would say, in the VC ecosystem. we can find some happening over the year, especially in a slowing down economy or a pandemic. It's kind of understandable, but usually it's bridges or startups trying to survive. This is a down round, but from what I've been researching is actually it was functional to actually respect certain ratio that they needed to respect between the amount that they loan out and the amount that is the equity of the company. So this is a regulatory push, if you will. So now I cannot find the exact point, but that's
that's just the paragraph just above the title. That previously the scale up had given blah blah blah. You go up.
There you go. Yes, there you go. Perfect. Yes. Very interesting.
Oh, cool.
Yeah.
Well, that means that they are deploying capital on the debt side. So
yes,
it's probably an interesting sign.
Yeah.
Not bad, not necessarily good, but something is going on. So
something is going on, and they're moving. So these guys are moving for sure. So it's to keep an eye for sure. All right, moving on. BKN 301 from San Marino, fintech company, essentially doing the next generation of cards, debit cards and credit cards, and banking, I would say, raising about 3 million. Let's go to the product. So basically, this is interesting, I thought, because more and more fintech companies are playing the game of simplifying cards and electronic payments through making it as simple as possible. So, you have the big player in Europe like Revolut, but also Italy has good cards. And this is definitely one of the players that will probably move in a similar space.
Yep, I agree. I don't know too much about the product, and I have to say this is not exactly an Italian startup since it is based out of San Marino, so almost, but not exactly.
Yeah.
But still, basically, the home market for them is Italy.
Yeah.
It is interesting. The investors. This is 3 million euros, but it is a syndicate without VCs. There are banks, there are private individuals. So this is an angel round, basically.
Yes.
Pre-seed,
yes.
A seed round. I agree that there are a lot of fintech that are approaching the consumer side of the market, in particular, with basically building a new product around the card and the services around the card. And it seems that they're doing the same, even though the website is still early, so it's not clear to me how different they are.
Yeah, it looks like they're really playing hard on loyalty programs, probably cashback of some form, I would say, and then peer-to-peer, like Venmo style, so a small amount of cash being quickly transferred between individuals. So it's kind of a validated way to think about moving money around. So yeah, but I agree, it's still in the making for sure. You have like private programs, you have corporate programs, and suppliers slash shops in general. So yeah, we'll see something evolving for sure. Interesting. All right, now moving on to a completely different round, connected to traveling. That's a deal which I particularly like because it's Mapo Tapo. Essentially is a marketplace for experiences in the climbing vertical, and they have been raising 355k from Business Angels, so it's like a pre-seed, I would say. And what I like of this deal is that they just go unapologetically vertical on climbing. A lot of platforms are trying to do travels across the globe, biking, motorcycles, sailing, whatever. But these guys are going like on a specific niche and target. And I think it is really powerful. because it's a model which has been validated in terms of experience e-commerce. I would say experience marketplace, yeah, let's say that, but for a very, very specific crowd, and I think it's a laser focus play.
Yep, I agree. I mean, I have no idea about the opportunity in that market, but I believe there is some if they launch the startup going after it. And probably there are some features of that market that might be particularly interesting for launching such a startup. So, repeatability, for example, is not like going once on a boat ride once a year.
Great
probably
point.
If you are so fond of mountaineering and climbing, you probably have a more frequent approach.
Yeah.
So
now think about also traveling needs. I mean, people that go on holiday on a boat have certain needs. The guy that climb, totally different needs with total different like places to visit. So it's good that they aggregate this kind of consumer. I feel it's a strong community. It's a strong community with, as you say, like a strong sense of business repeatability where they want to explore the world in a certain fashion. And this is just playing in this kind of market. So I like it a lot. So good job, Nick, of looking for it and finding it. I really enjoyed that. On the same wave is BottegaLigure, which is an e-commerce startup raising 200K from an angel. So very similar sort of round structure. And again, it's an e-commerce validated model, but again, extremely vertical, almost too vertical, I would say. But it's good that they go like as detailed. So basically they're selling the best product from Liguria region. And they do boxes experiences, so it's interesting.
Yeah, in this case, you might be right. I mean, this is very vertical. So for e-commerce, having just a few SKUs with a lower average ticket might be not great. But still, I believe they're also premium products. So there's some margin and some specific way of marketing them outside. And actually I'm getting hungry just looking at the pictures. But
and I'm very surprised. I'm very surprised also about the round, because Liguria, it's the stingy region of Italy. So awesome. I'm sure they had a ton of problems. All right. Moving on and going actually back to it's to an interesting play from Eni actually. So let's talk about Tate, smart utility company, and always riding the wave of simplifying difficult product that have been difficult to access, like banking and credit cards and debit cards. Here we're talking about utilities and how, especially in Italy, we have a big problem of non-transparency in terms of data from utility companies. Nobody knows really how to read their gas bill or their light bill, and there's been a few cases of company trying to make it as transparent as possible. So that's definitely something interesting. And Eni has been essentially buying equity in the company. Actually, did they acquire? Yeah. So basically, they raised a Series
invested
A from. Okay.
Yeah, but Tate, it was a startup, I think, launched by Nana Bianca.
Yes, you're right. You're right.
And both rounds, the first one and the second one, was subscribed by Eni, so by Eni, because they are seeing this as a diversification from their portfolio. Yeah. It makes sense. I mean, from a point of view of an investor, I see it as a very early exit. So it's probably good for the founders, because you basically have a safe place where you put your company.
Yes.
From a point of view of an investor, your exit is already on your cap table, so it makes fundraising, for example, quite difficult outside of the Eni group. And given that the second round has been raised by Eni again.
Yeah, it's a good example though. It's still a good I mean, in any case, is another good example of how a big utility behemoth is trying to actually become as lean as possible by playing with these new ways of approaching the consumer. So maybe they're not going to be the only and the best, but it's definitely a good way to understand the customer for sure. Interesting. All right, moving on. Also, let's talk about M&As, mergers and acquisition. Let's talk about Redo, instant lending platform, startup acquired by OCS. I didn't know about OCS, so maybe let's start from there, Nico.
Well, it's I didn't know about OCS as well. It's a platform. So we spoke about platforms a few episodes back, you remember?
Yeah.
Platform in the private equity sense, because OCS is controlled by Charm, which is a private equity family office firm, and they are aggregating products that operate in the consumer finance space. So basically putting together all these services and offering this portfolio to the customers. And in this specific case is Redo Finance. It was a startup. That's a startup for mobile-based instant lending.
Yeah.
Micro instant lending.
Micro lending. Yeah, exactly.
Micro lending.
That was interesting. Actually,
it is. It is very millennial.
Yes.
Actually, very Gen Z.
Even that, yeah. Like early Gen Z. I mean, late Gen Z. Like at the edge of the Gen Z. Like because I believe like it's micro lending, and we're talking about how essentially I was reading a little bit their model. You just need to provide like access to data, which I believe is like phone information or something like that. And then through algorithms, they can instantly assess whether you're eligible for a loan up to, are you ready? Sit down, 500 euros.
Micro lending.
It's totally micro, but I don't know. I don't know how I feel about this though. I mean, in terms of micro lending, what kind of customer base, how exactly it's going to play, how big that can get. I don't know.
And then the use cases of this, because if you think about the commerce world, the buy now, pay later phenomenon has exploded now, and major e-commerce is all they have the option to pay in installments. So probably that direction is closed. So there is either services or real world purchases. There might be the common usages of such a micro amount of money. But still, I've got an idea. What do I know?
No, but I feel it's more digestible when it's associated with e-commerce. Like I can get it intuitively, but maybe I'm already too old. But maybe there is an angle in micro lending, something people our generation never consider really. I mean, it was the loan to the bank. You need to physically go there and so on. Never had this option. And maybe, you're right. It can trigger different way of consumer behavior. Yeah, excellent point.
I don't know.
Interesting.
We might find out. Yes, we might find out one day in the future that Redo Finance has sustained a lot of blooming entrepreneurs, raising very small amount of money to kickstart their ideas. So
interesting.
Who knows? Anyway, they joined the OCS group. Yeah.
Moving on, let's talk about Qonto, French startup. Well, scale up, I would say right now. Pretty much closer to that spectrum. I think they raised about there you go. Series D funding round of about 500 million, And they've been basically converging capital from some of the quickest investor in town, Tiger Global, which is by far the one of the protagonists of the latest months. And they've been deciding essentially to expand and invest in Italy. And it's big news because the big angle of Qonto is really to adapt their services to their different national needs, and so they're coming hard to Italy and trying to cater the Italian customer. So that's definitely something worth looking into.
And they're going after the small and medium enterprises market.
Yes.
Which I believe, if I know the market, there's an open ocean there, because traditional banks offer very bad services to small enterprises in particular, micro enterprises in particular. So it's very cumbersome to have to manage your bank account and your bank procedures in Italy. So they might have a very interesting strategy here and very interesting opportunity.
And I would add on that, which is a good point a good problem for them to solve is the complexity of Italian accounting practices. And their goal is really to have one solution which rolls in bank account, bookkeeping and accounting in one product. So if they can do it in Italy, like QuickBooks is doing it in the US and they're doing it in France, that's definitely like a big game changer for sure. So very, very interesting. Very interesting. Right. Moving on. Let's talk about bad news. Nico, what's happening here? So the news is the European Innovation Council is slow in giving out money that promised. So what is happening?
I was curious about this news because the EAC started out with the new investment program a little bit more than 1 year ago, I believe. As the Horizon 2020 program was ending, they launched this new EAC accelerator and pathfinder and a macro program where they were going to invest both grants and a blended equity type of investment. So they were going to set up an investment fund within the EIC. So there were a lot of new things coming up from there. And it seems that they have some trouble or slowdowns in investing the equity part. So grants, they know how to do them, that's for sure. They do them for years now. But equity, it seems that it's more complicated.
Trickier, a little bit trickier.
Yeah, a little bit trickier. Hopefully they will sort it out. But for the time being, it seems that some startups across Europe that are not receiving the money they were promised, and that's a problem. If you are on the burn rate and you were expecting finance a few months back, and if it not materializes, it's
for sure
can be a problem.
That's crazy.
So hopefully they will sort the problem out.
It really looks, reading the article, that it's a bureaucratic issue more than anything. So that's how they put it out the word. We will never know the truth, but it's definitely
exactly. Well, in insight, the problem with managing the equity part was not easy to solve. But then again, I've got no idea what's happening currently. But still.
Sure. Interesting. We'll see what's gonna happen.
Yes, if you apply to the next cutoff, please pay attention to the level of the funds.
Exactly. All right, let's talk about the new terms from Y Combinator. And we have our friend Andrea Orlando, which has been a great host of our, a great guest of our podcast. So guys, check out the episode with Andrea, very insightful guy. So he's been interviewed about the YC, the new YC terms, and how exactly that's going to affect the EU ecosystem in general. So that's interesting. I was looking into the YC terms in general, and I believe, so now the deal is a little bit different. So as a background, they've been investing through SAFE, which is a simple agreement of future equity. Essentially, in the simplest form is putting money in a company. We don't know how much it's going to be worth. So just simply giving the money out. The initial deal was basically 125K, which now has been moved to 500,000, where the original 125K has been used for 7% of the company, and then the rest is essentially evaluated at the next coming round. So it's like a hybrid format. So they place 500,000, one is for 7%, and then the rest will show up when the evaluation comes. And the interesting thing is that one condition is not depending on the other. So they sign both safe at day one. And then of course they give access to the founder, to the deal, to the whole ecosystem that YC is offering. So a great way to accelerate the company. Another interesting point is that now they also are investing not only in the US entities, but they opened up to, I believe, Singapore, Canada, and then a third country, which I will find out. Very interesting, Cayman Island. So US, Cayman Island, Singapore, and Canada Corporation.
That says something on where they want to source the next deals. So I hear crypto echoing.
Yes. Yes. And Canada, maybe cannabis, maybe.
Maybe Singapore as well. So the funny thing, the bit that I find interesting here is that, as you said, the SAFE is a tool, as a financial instrument that basically sets the valuation of the company to the next equity round. So today you don't know how much the company is valued. You will know at the equity round, and the SAFE will allow you to subscribe to the value of the next equity round. Here it's basically a meta SAFE. So your SAFE, this SAFE, the one that they are releasing right now, is going to attach to the SAFE that you might raise between the acceptance into YC and the equity round that we raised eventually in the future.
Correct.
So it's
a safe on a safe. It's a safe on a safe.
Meta safe.
Yeah, love it.
But anyhow, the point is that this modification in the terms from YC set out like like an earthquake, all these waves of update to all the other accelerators and business angels in the world, because everybody was investing following the rules of YC, more or less, give or take some geographic differences. And now everybody has to decide whether and how they will follow the update from YC.
Good point.
So further pressure into the way the other accelerators and seed stage investors will behave.
Yeah, I mean, intuitively it looks like it's kind of a good sign, because they want to really infuse more capital into early deals. On one side, on the other side, there have been a big debate on how YC quality of deals has been decreasing over the years, but that's a total different podcast that we need to do. And yeah, it's I don't know whether I take it as a positive or negative, but definitely. And most of all, why now? I mean, why changing the original terms to bigger tickets? Why is it now a good moment?
I don't know. I can only postulate that there's a lot of liquidity in the world, and there's so much liquidity that some good entrepreneurs, I don't know whether the best, but some good could just go along and say, hey, I mean, come on, I can raise 5 million like snapping my fingers. Yeah, I don't need the Y Combinator anymore. So I don't know. It might be the historic moment when there is so much liquidity that there's some pressure from everybody to raise their bars.
That's a good point.
That's not so good.
Yeah, no, for sure.
The music might stop, but we don't know when. So.
All right, Nico, with that, that's all for the week. And thank you very much for joining. And thank you guys for joining on Clubhouse. We're live again on that platform. And the recording of this episode, it will be on YouTube and our Spotify channel, and also available on Apple Podcast and Google Podcast. And for the next session is always going to be on Mondays, 6:30. So please join us again. And thanks again.